Guys, what's going on? It's Luke bringing you another portfolio update. I'll be discussing my Robinhood portfolio mainly, and then I'm going to show a little bit of my M1 Finance portfolio. So jumping right into the video, not much difference from last month. We still have just about all the same shares. I think it's actually the same shares that we had from last month. However, I am starting to really look at X and Crocs as trying to get out of them. Currently with Crocs, I purchased them there at 26.18, so they're currently at 26.45. So we're looking at about around 1% total return on them. Probably going to let them ride up a little bit. I was looking at the chart in the month; they've just been kind of consistently going up, so probably going to ride that wave for a little bit. If you watch my last video based on the inverted yield curve, definitely want to be holding more heavily in cash. Probably get around 20% of my portfolios in cash until we see a little bit of a correction. We've been doing nothing but straight up since the beginning of the year, since the Christmas Eve downturn, so we're definitely due for at least a little correction, at least, if not a full bore recession. So definitely going to try to get out of Crocs here. If we go to X, definitely a learning opportunity for X. I got them at about 20.49. Yeah, there we can see that. And I actually got them a little while back. Got them around here as they were coming back up. Made it all the way to 25. Told myself I was gonna cash out after 25. They never made it there, so they came back down. I mean, if we look at the year, they've been hit pretty hard, but it looks like they're starting to trend back up. They didn't hit their lows. They kind of hit $17, as we can see there, went up to 24, and then they hit 19, and 19's really been the floor. They really haven't gone under 19, and they've tested that level a few times. So I expect them to go back up. Definitely going to get out this time around 24, 25. If not before then. I really don't want to be holding them if we go into a downturn, because it's not going to be the greatest of things. So definitely want to get out of them. And then if we look at the rest of the portfolio, Activision Blizzard has been paying off very well. I got them when they dipped pretty hard, when a lot of the gaming stocks fell. We're up 10% on them, so definitely a real good trade. I definitely got to figure out where I'm going to, get out of. But if we look at the year chart, we haven't even scratched the surface on gains if we were to get back up to those 80 levels. So definitely going to be holding them for a little bit longer, and I definitely believe in them for the long term. I know they're not going anywhere anytime soon. So Activision has definitely been a really good one for me lately. Just recapping what we have in the portfolio here, we have Procter & Gamble, ADP, Waste Management, Microsoft, PayPal, Facebook, Tencent, Square. A lot of these have been, I've had them for a year, so if I were to cash out, I would be in the long-term capital gains, which is great. But for Square, Tencent, PayPal, Microsoft, Waste Management, ADP, and Procter & Gamble, I definitely would not mind holding those even if we were to go through a recession. So definitely going to be just hanging on to them for the long term. As for Facebook, they have been performing very well lately. If you look at their week chart, it's just incredible. 5%, just absolutely on an absolute tear. If we look at their 3-month chart, we got a 34% return. It's absolutely incredible. That's what I'm looking at, 34%. I believe I got in them around 3 months ago now. Yeah, November. So it's actually been 6 months or 4 months. So they've been doing very well for me. I'm looking to get out of them around the $200 level. That's kind of where they've leveled off, and I think if they get up to there, I'm sure they're going to come, correct down a little bit. So I'm eyeing that $200 level to get out of Facebook. But other than that, I'm going to be holding strong for everything else. If we look at the month on the portfolio, we're up 4.3%. And then 3 months is absolutely incredible, 25%. We're just around the time that it bottomed out. So we're doing very well for sure. So definitely going to be hanging in a lot more into cash, and there's not as many good deals out there as there was 3 months ago, and definitely going to wait for the correction there. So that's going to do it for the Robinhood portfolio. On to our M1 Finance portfolio. And we've been doing very well with them. As you can see, I've got $41.93 in cash just sitting there. If you watched my last video, I discussed I'm going to be holding a lot more cash in waits to get better deals. And obviously, I'm going to be just dumping into SPHD and KO Coca-Cola. And we have our market averages, the QQQ tech sector for the NASDAQ, SPY, SP 500, and the VTI Vanguard Total Stock Market. I'm not going to be putting too much more into those. I don't think I'm going to be putting anything into those anytime soon unless we do go into a recession. Then I'll be dumping into that. But it's mainly going to be SPHD and KO Coca-Cola, just mainly for that dividend play. If we were to go into any sort of downturn, I still have the income coming in. If we look at the all-time chart, we're up 12%, which is great. Looking at $4.50 in dividends and then $57.33 in market gains. So that's definitely very good. It's very interesting to see this grow. I put $20 a week into this portfolio, so obviously we've gained $1.93 in dividends alone, which has been really great. If we look at the holdings, got about 4.5 shares of SPHD. Definitely want to up those numbers, but they're at all-time highs, so there's really not the best of deals out there. And then getting close to 2 shares of KO Coca-Cola. Definitely want to up my position in them. They're, obviously done very well over the past, decades, and I'm sure they're going to continue to do very well into the future. So other than that, that's going to do it for the April portfolio update. Not much changes happening, mainly just being a little bit more conservative and trying to hold as much as I can in cash and waits for some sort of correction sometime soon. So if you liked the video, feel free to give it a like and comment in this comment section below. Has your strategy changed at all in the last 3 months, or are you holding strong to what you've been doing? If you haven't used Robinhood before and you haven't used M1 Finance, feel free to use the link in the description below. If you use the link for Robinhood, you will get a free stock, and if you use the link for M1 Finance, you will get a free $10 credit to your account after you fund $100. That's going to do it. See you in the next video. Thanks, guys.